Good afternoon, everyone. Jason here. Today is April 28th, and this is your aftermarket update. So it's been a couple of days since we've done one of these market updates. We conducted our live training event on Tuesday, April 26th, and we were playing catch-up on Wednesday. So we are here today. Wanted to spend just a couple of minutes with you talking about the market, talking about the trade plan, talking about the market maker levels, and just kind of giving you an overview of how the market performed in here today. So normally what I like to do in here is I like to give you, talk about the market, then we show you one of the setups on the day that, trade of the day, so you can kind of get a feel of how we manage trades, enter trades, and those kinds of things. And we really don't have one of those type of trades to show you today. But what I did want to do is show you the market maker levels and how they worked on the ES, and then I want to show you the trade plan on the CL and how that ended up working out today as well. So overall, the market was fairly choppy going into the European session close. So we really didn't have that many trades today. In fact, we took 2 ES trades, 1 winner, 1 loser, and we took 1 winning CL trade. These were all 2 lots each, and you can see that after commission, we were only up about $87.92 on the day. So not a huge day by any stretch of the imagination. But that really didn't tell the whole story. It was very choppy and bouncy. And on days like this, being cautious and waiting for an opportunity that may or may not ever happen is the best practice. So even though the P&L, while still positive, doesn't look massive, of course, what it does do, though, is it shows you that we were able to patiently wait through for a couple of different setups, and sometimes that's the way the market is. Sometimes not trading is trading. So anyway, I'm going to show you a couple of things here. First, we're going to start on the ES chart. I want to show you the market maker levels and how they performed. We were actually talking about taking this trade in the room, but then as we got closer to the European session close and there really hadn't been much going on, we ended up backing away from this trade. But I did want to show you the market maker levels there on the ES, and then we're going to talk about the trade plan on the CL today. So first thing we're going to do is we're going to talk about these market maker levels. These are your daily structure, signal, target, and mid. Basically, these are first-time touch levels, short or long, depending on which side and depending on the nature of the existing market conditions on a particular day. And so if you look, most of the energy was created in the overnight session. This was the Bank of Japan rate announcement right here. Drove the market down and then drove the market. The market kind of rallied back up into the open here. And then from about the open until 10:30, you were 2082 up to 2091. So there were 9 points of moves here, but they were very choppy and jagged. One of the things that we talked about doing in the room today, and I'm going to turn on the revision signal, we talked about potentially looking to get short somewhere around this daily structure signal between 2092 and the revision target up here at 2093. As the market continued to move, we were looking in that area here as kind of the middle, this zone here between the daily structure signal and that daily revision target. So as the market was rallying up to that zone, again, like I said, we were getting close to the European session close, and it was about right here that I decided to pull the plug on the trading day, right around 10:15, 10:20. What I didn't want to do is get caught into a trade, have the market go sideways, and we had been sitting here for about 2.5 hours by this point with not much activity, just a couple of 1 winner, 1 losing trade, and the market moving very sluggishly. So anyway, if you did get short here off this market maker level at 2092, the market rallies up into it. You would have an 8-tick target and an 8-tick stop. 2094 would have been the target would have been the stop above you, and 2090 would have been your target below you. Now, that's if you're trading 2 lots. If you're trading 3 or more lots, then what you would be looking for is a move down to the daily structure mid, the daily structure signal, and then potentially even as deep as this daily structure target, right? Those are the ideas that you're looking for. So once it triggers a first-time touch of the signal, you're looking for it to get to the mid. Once you get confirmation below that mid, you're looking for a minimum move down to the next signal, and then ultimately kick the signal, pay the target. That's kind of the catchphrase that we use: kick the signal, pay the target. And you would have a 2-point stop up here. So as the market rallies into this level here, you do begin to get a move above it here. The market does get up to 2093.5, and before it begins to come down. So 2093.5, that would have given you 6 ticks of heat. You would have had an 8-tick stop, and then you would be looking for the market to come down into that daily structure mid. So as the market begins to rotate around, and the market then gets a nice big move down to the daily structure mid. Once you close underneath the daily structure mid, you would have had confidence that you'd be looking for this daily structure signal, and then you would have been looking to reach out to that daily structure target. So the market rotates around the mid, comes down into the daily structure signal, and then gets really close to that daily structure target down there. So the entry here at 2092 called really the high of the day, the daily structure signal, and came all the way down to 2065 quarter. So that was a little over 26 ES points. Now, would you have taken all of that? Probably not, but it did give you a really good opportunity, and the market does do like we think it will do when it hits your market maker level. So again, if you're trading 2 lots, what I do right now, trading those 2 lots, I'm in and out at 8 ticks. If I'm trading 4 lots, like you've seen me do in the past videos, you would have had a target at 8 ticks, another target here at 10 points on the ES at the structure mid, and then probably your final target down here at 20 points, and you would have hit all of those. So again, just depends on how you play it, but at the end of the day, the daily structure signal performed just as it is designed to do. And again, it is part of your market maker level, defining your trading edge training package, and that is information here that we provide you. We teach you how to draw these levels, we teach you how to trade these levels, and we give you the theories and rationale behind how to get the information out of these levels. So again, if you haven't done so already and you're interested, please let us know. info@theoiltradinggroup.com, info@oiltradinggroup.com, and we will get you set up on looking at this training package. All right, so let's talk about the CL today. The CL was much more choppy today. In fact, if you look right here, we'll turn on these revisions just really quickly here. This blue line represents pit open here, and you can really see that from the pit open, you had 45.15 all the way into about 11:45 today. So from 8 o'clock, so really for 4 hours, you went from 45.15 up to 45.73. That's 58 ticks low to high. That's a very narrow range on a trading day by any measurement, right? That is very narrow range on the trading day. So again, we were patient. We followed our trade plan. We followed it very closely here today. In fact, I'm going to show you a tactics sheet here that we use. Let me get this pulled up here for you. All right, so we have a trade plan, okay, and then we have a tactics worksheet. So let's see if we can make this a little bit bigger here. All right, so the way that the trade plan works is we give you kind of what our thoughts on direction for the day is. Is it going to be bullish, bearish, or is it going to be choppy, neutral trading conditions? Once we get that squared away, we then give you a primary and secondary trading strategy based upon that particular session bias. And in this case today, we had well, let's do it this way. What we do is we give you the levels that we're looking at, we give you the sweet spot of the level, and then we give you a tactic or a setup to use. So we break these tactics or setups down into breakout trades and fade trades. So we're just taking a look here, the tactic B2, that stands for breakout trade setup number 2 on your chart here, and there is the B2 setup. We give you kind of the rules, how to play it, and how to look for that particular setup. Now, these are guidelines. They're not 100% cut in stone. For example, this gives you 9 steps here. Well, there's not necessarily 9 steps, but what you are looking for is the pattern, a similar type pattern. Here on your F1, which is a fade, first setup on the fade trades, you scroll down to the fade trades. We give you a little bit of information there, and then there is your F1 fade trade, and then we give you all the rules, and we give you how to what the setup looks like and how to play that particular setup. So we break the market down into 3 phases. We break it down into structure, right? So we have decision points, inflection points along the way. We break it down into structure. Then we give you a strategy based on how to play that structure, and then we give you the tactic to how to execute that strategy. So we break it down into 3 parts: structure, strategy, and tactic, and that's the way that we break this trade plan down. So today's tactic was the one that we took first, was this retracement zone setup. This is your F2 on your tactics sheet. Come over to your tactics sheet. We give you the retracement, how to draw it, and what the rules are. And so for this particular setup today, this is the one trade that we took on the CL. The market we take this measurement here from this low up to the swing high at this point. And we got up to the swing high, then we retraced down right to the sweet spot here. Hopefully you can see that okay. Right? Hopefully you'll be able to see that okay. Okay. And we got long, let's see, that was actually, it was a little bit higher than that before it retraced. Yeah, we did this before the open. Sorry. It retraced, it went up to there, came down. We got long at 18. The market came down to 14. Actually, this was the first time. Market came down to 16. Rallied a decent way. Came back, rallied, came back, took us out right here before it continued to rally the whole day. We got taken out at to the tick +1 before the market continued its rally. Now, you'll notice here that from this time frame, here is the open. Right here, we made a high at the open at 71. We came down here to 14. So what is that? 71 minus 14. That range for the better part, most of the morning, was 57 ticks from low to high. So really all the way until noon Central Time. So about 4 hours and 15 minutes, the market was very choppy. So it's like I talked to you about there on the ES. There just wasn't a lot to do in all of this chop. And so even though it doesn't look like we made a lot of ticks today, we didn't lose a lot of ticks, and that's really important on a day like this. So as the market rallies up into the zone, we did take this long. We got a few ticks out of it, and they came back and took us out at break even. If we stayed around today, I'm going to show you, we had a short opportunity on your secondary strategy. This would have been an opportunity to take today. We said 46.10 up to 46.25, with the sweet spot being 46.25, but the front of this zone, or the beginning of that zone, 46.10 up to 46.25, using the fade 1, the F1 strategy, right? That would have been your tactic, rather, the F1 tactic. We kind of give you an idea here how to play that. And so as the market rallied up here, we made a high at 46.14. The market was overbought as per the rules here. And this area, this zone, would have been a place to get short. And, of course, the market goes from 46.14 all the way down here to 45.57. So what is that? 57, let's see, 43 plus 14, 57 ticks total in that move there. Very choppy day. 120 ticks was the total range on the day. That is about 70 ticks lower than your 10-day average, and it is about 60 ticks lower than your 20-day average. So, again, not a lot of opportunity here today, but had you stuck with your trade plan and your market maker levels, you would have done just fine. As it was, we stayed out. The trade plan not only gave you opportunities, but it really also kept you out of the choppy trading conditions, and that is the importance of sticking to a trade plan. So anyway, that summarizes the trading day here. Even though, again, we didn't get a lot of the ticks today, we didn't lose a lot of ticks, and that's just as important as winning ticks on a day-to-day basis. So, again, as always, I want to say thank you for spending time watching the recap videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.